Welcome back to Investing Talk Podcast. You know we all love a good burrito, especially after a long week. And chances are you've probably grabbed one from Chipotle Mexican Grill at some point. But today, we're swapping our usual order for a balance sheet and digging into Chipotle, ticker symbol CMG. From an investor's perspective, we'll be looking at their recent performance, ambitious growth plans, and what the future might hold for this fast casual giant.
Yeah, what's interesting is, while a lot of people are familiar with Chipotle as consumers, they might not be as familiar with the company's financial story.
That's so true. So let's start by taking a look at their annual report. For the fiscal year ending December 31st, 2024, they just released it. And the numbers are pretty eye-catching.
Absolutely. Their revenue reached a whopping $11.3 billion.
Wow, that's a pretty significant jump, isn't it?
It is a 14.6% increase from the previous year, to be exact. That kind of growth in the restaurant industry is definitely worth noting.
So what's fueling this impressive growth? Is it just people craving more burritos?
Well, it's a bit more nuanced than that. There are two key factors driving this growth. First, their comparable restaurant sales increased by 7.4%. This means that their existing locations are performing really well, attracting more customers and generating more sales.
So it's not just about opening new locations, but also about making sure the existing ones are thriving.
Exactly. And the second factor is their expansion strategy. They opened a staggering 304 new restaurants in 2024. That's a clear sign of their confidence in future growth.
That's a lot of new burritos being made. And on top of the revenue growth, their earnings per share, also known as EPS, increased to $1.11. compared to 89 cents the year before.
Yeah, that EPS growth suggests that they're not just growing their revenue, but also becoming more profitable, which is something investors love to see.
Now, speaking of investors, we should probably look at what the analysts are predicting for 2025, right?
Yeah, right. And this is where things get a bit more intriguing. While analysts are projecting continued revenue growth for Chipotle, with a 12% increase to $12.7 billion, they've slightly lowered their EPS forecasts to $1.29 per share, down from the earlier estimate of $1.31.
So even though revenue is expected to keep growing, the EPS projection has been adjusted downwards. What could explain that discrepancy? Are analysts concerned about something specific?
That's a great question. It suggests that while analysts are confident in Chipotle's ability to keep growing its sales, there might be some underlying factors affecting profitability. It could be anything from rising costs of ingredients and labor to increased competition in the fast casual dining space.
Okay, so there are some potential headwinds to consider, even amidst the positive revenue outlook. And did the market react to this news in any way?
Yes. When the earnings report came out on February 5th, 2025, the stock dipped by 2.8% over the following week, landing at $57.32.
So even though Chipotle had a strong year overall, the market seems to be taking a cautious approach, perhaps because of those slightly lowered EPS projections.
Precisely. It seems investors are weighing both the positive and potentially challenging aspects of Chipotle's current situation.
All right, so we have this interesting mix of strong performance and some mixed signals for investors. Now, before we jump into the technical details of Chipotle's stock, let's talk about some of the factors that are currently driving their success. For instance, their digital sales performance has been incredibly strong, hasn't it?
Absolutely. Their digital sales comprised a significant portion of their revenue in 2024, accounting for 35.1% of their food and beverage revenue.
Wow, over a third of their revenue coming from digital orders. That's really impressive. It shows they've adapted well to the changing consumer landscape and the increasing demand for online ordering and delivery.
Exactly. And let's not forget about their ambitious expansion strategy. They're aiming to open between 315 and 345 new restaurants in 2025. This suggests they see a lot of room for growth and are confident in their ability to capture new markets.
That kind of expansion requires significant investment and operational expertise. It also indicates their belief in the long-term growth potential of the brand. But it's not just about physical expansion, right? They're also making strategic investments in innovation.
Through their Cultivate Next fund.
Yes, that fund is focused on supporting companies that align with Chipotle's strategic goals, such as sustainable food sourcing and new technologies that could enhance the customer experience. So they're looking beyond just expanding their restaurant footprint and exploring new ways to improve their operations and offerings. It's a forward-thinking approach that suggests they're not content with simply maintaining the status quo.
I agree. And it's worth mentioning their ongoing stock repurchase program as well. They still have $1 billion available for buybacks. This suggests they believe their stock is currently undervalued and represents a good investment opportunity.
So we have these positive factors, like strong digital sales, aggressive expansion, strategic investments, and stock buybacks, all contributing to Chipotle's growth story. But now, let's shift gears a bit and delve into the technical analysis of Chipotle's stock, ticker symbol CMG. What can you tell us about how the stock is currently performing from a technical perspective?
Well, as of today, February 8th, 2025, CMG is trading at $57.42. To understand this figure, we need to look at its recent performance.
Okay, so it's up slightly from that dip after the earnings report. But how does this price compare to its overall trading range?
Well, its 52-week high was $69.26, and its recent low was $47.98. So it's currently trading somewhere in the middle.
So it has room to move in either direction. Now, to get a better sense of its potential trajectory, let's look at some key technical indicators, starting with moving averages. Can you explain what moving averages are and what they tell us about Chipotle's stock?
Sure. Moving averages are essentially trend lines that smooth out price fluctuations over a specific period. They help us identify the general direction of a stock's price movement. One commonly used moving average is the 50-day simple moving average, or SMA.
Okay. And what does the 50-day SMA tell us about Chipotle?
The 50-day SMA for CMG is currently $60.44. And the fact that the stock is trading below this average could suggest a bearish trend in the short term.
So the short-term momentum might be downward. What about the longer-term trend?
To assess that, we can look at the 200-day SMA, which is currently, well, the data we have shows an unusually high figure, so it seems there might be an error there. We'll have to disregard that for now. But focusing on the 50-day SMA, the fact that Chipotle is trading below it is something to keep in mind.
Okay, so one potential red flag. What other technical indicators should we consider?
Another helpful indicator is the Relative Strength Index, or RSI. This measures the magnitude of recent price changes to see if a stock is overbought or oversold. An RSI below 30 is considered oversold, while above 70 is considered overbought.
So where does Chipotle's RSI currently stand?
The RSI for CMG is currently at 48.43. This suggests that the stock is neither overbought nor oversold, indicating a relatively neutral position, with no strong buying or selling pressure dominating the market.
Okay, that makes sense. What about the MACD?
The Moving Average Convergence Divergence, or MACD, is another momentum indicator that helps us spot potential buy and sell signals. The MACD for Chipotle is currently at negative 0.63, which generates a sell signal.
Interesting. So another bearish indicator. It seems like the technical indicators are painting a somewhat cautious picture at the moment. What about the Bollinger Bands? What insight can they offer?
Bollinger Bands are lines plotted 2 standard deviations away from a simple moving average. They help us visualize a stock's volatility and potential price fluctuations.
Okay, so what are the Bollinger Bands telling us about Chipotle?
For CMG, the upper band is at $59.39, and the lower band is at $55.59. The stock is currently trading within these bands, hinting at the possibility of a breakout in either direction.
So it could go up or down, making it important to watch for any significant movements outside of these bands. And lastly, what about volatility?
CMG has shown a volatility of 3% over the last 30 days, indicating relatively moderate price fluctuations.
So not a roller coaster ride, which could be reassuring for some investors.
Right. Now remember, these technical indicators provide a snapshot of the current market conditions and don't guarantee future performance.
Of course, they're just pieces of the puzzle. We need to consider them alongside the company's fundamentals and broader market trends. So far, we have a mix of signals, strong fundamentals with some questions surrounding EPS projections, and technical indicators that are leaning slightly bearish. It's definitely an intriguing situation for investors. What's your overall take on Chipotle's stock right now? Would you recommend buying, selling, or holding?
Based on everything we've discussed, I think a hold recommendation is appropriate for CMG at this point in time.
Hold. That's interesting. I can see why you're hesitant to issue a strong buy recommendation given the mixed technical indicators. But Chipotle seems to have so much going for it. They're a leader in the fast casual space, their digital sales are through the roof, and they're expanding aggressively. What's making you lean towards a hold rather than a buy?
You're right to point out their strengths. Chipotle is undoubtedly a successful company with a strong track record. However, those slightly lowered EPS projections for 2025 are giving me pause.
So those EPS projections are the main reason for your caution.
They're a significant factor. Remember, earnings per share are a crucial indicator of a company's profitability. And the fact that analysts have adjusted their forecasts downwards, even amidst strong revenue expectations, suggests there might be some headwinds impacting their bottom line.
Okay, that makes sense. What could be causing these potential headwinds? You mentioned rising costs earlier, right?
Exactly. One possibility is the rise in cost of ingredients. We all know that inflation has been a major concern, and food prices, in particular, have been on the rise. Chipotle prides itself on using fresh, high-quality ingredients, and those ingredients are likely becoming more expensive.
That's true. They're committed to using sustainably sourced meat and produce, which often comes at a premium price.
Exactly. And in addition to ingredients, labor costs are also likely increasing. Chipotle has been raising wages to attract and retain employees in a tight labor market.
So even though they're selling more burritos and bowls, these rising costs could be eating into their profit margins, which might explain the slightly lowered EPS projections. Are there any other factors that investors should be aware of?
Competition is always a factor in the fast casual dining industry. There are constantly new players entering the market, vying for customers' attention and dollars.
It seems like every week there's a new salad chain or poke bowl place popping up.
You're not wrong. Chipotle has done a great job differentiating itself with its focus on fresh, customizable food and its commitment to food with integrity. But they can't afford to become complacent. They need to keep innovating and finding ways to stand out in a crowded marketplace.
And speaking of innovation, you mentioned earlier that they've invested $63 million into their Cultivate Next fund, which focuses on supporting companies that align with their strategic goals. How might this fund contribute to their future success?
This fund is a smart move. It allows Chipotle to tap into emerging trends and technologies. That could give them a competitive edge. Imagine, for instance, if they find a company that's developed a revolutionary new way to source sustainable produce, or a cutting-edge mobile ordering platform.
That could be a game changer. But on the flip side, expanding too rapidly could present its own set of challenges, right?
Absolutely. Opening hundreds of new restaurants requires significant capital investment, careful site selection, and the ability to train and manage a growing workforce.
Not to mention ensuring that quality and consistency are maintained across all locations.
Precisely. Rapid expansion can sometimes lead to a decline in quality, or a dilution of brand identity if not managed effectively.
And it's not just about internal factors, right? There are always external forces at play that can impact a company's performance.
You're absolutely right. The macroeconomic environment plays a significant role. We're currently in a period of uncertainty with rising interest rates and concerns about a potential recession. These factors could potentially impact consumer spending, which could in turn affect Chipotle's sales.
So people might cut back on discretionary spending, like eating out, if they're feeling less financially secure.
It's a possibility. But on the other hand, Chipotle could potentially benefit from its value proposition.
You mean the fact that they offer relatively affordable meals compared to some other dining options?
Exactly. In a tough economic climate, people might choose to trade down from more expensive restaurants, making Chipotle a more appealing choice.
So it's a bit of a balancing act. There are potential risks and opportunities associated with both internal factors, like expansion and cost management, and external factors like the broader economic landscape.
Yes, and as investors, it's our job to carefully weigh all these factors and assess the overall risk-reward profile of a potential investment.
And with Chipotle, it seems like there's a lot to weigh.
Mm-hmm.
We have their strong brand, their digital savvy, their expansion plans,
Mm-hmm.
and their commitment to food with integrity. But we also have to consider those slightly lowered EPS projections and the mixed signals from the technical indicators.
It's a complex situation, and there's no easy answer.
So given all this complexity, what are your thoughts on the most likely scenario for Chipotle in the coming year? Where do you see them headed?
Well, despite the challenges we've discussed, I believe Chipotle is well-positioned for continued growth, even if it's not as explosive as we've seen in the past.
So a more moderate, sustainable growth trajectory.
Exactly. I think their digital sales will likely continue to grow, their expansion will continue to broaden their reach, and their investments in innovation could pay off in the long run.
But they'll need to carefully manage those rising costs and stay ahead of the competition to achieve that sustained growth.
Precisely. And they'll need to navigate the potential uncertainties of the macroeconomic environment, but I believe they have the leadership and the strategies in place to do just that.
Okay, so for investors who are considering adding CMG to their portfolio, what's the key takeaway message here? What should they be watching for?
I'd say keep an eye on those technical indicators we discussed earlier. Look for signs of a shift in momentum to the upside, such as a break above the 50-day SMA or an improvement in the MACD, and stay informed about their earnings reports and any news regarding their expansion plans and strategic investments.
So basically, stay informed, be patient, and don't rush into any decisions.
Exactly. Investing is a marathon, not a sprint. It's about making informed decisions based on a holistic understanding of a company's performance potential and the broader market context.
This has been a really insightful discussion about Chipotle, going beyond just burritos and bowls to explore the complexities of their financial performance growth strategy and the various factors that could influence their future.
It's been a pleasure sharing these insights with you.
Likewise. Now, before we wrap up this episode, I want to emphasize that this is just one perspective, and investing always involves risk. It's essential to do your own research, consult with a financial advisor if needed, and make investment decisions that align with your own financial goals and risk tolerance.
That's excellent advice. Remember, investing is a personal journey, and what works for one person may not work for another.
Absolutely. And now for our listeners, we'd love to hear your thoughts. What stood out to you in this analysis of Chipotle? Do you agree with our hold recommendation? Or do you have a different perspective? Share your comments below, and let's continue the conversation.
We appreciate you tuning in to Investing Talk Podcast. And don't forget to subscribe. Share this episode with your fellow investors, and leave us a comment with your thoughts or questions about Chipotle. We appreciate your support.
You know, as we've been discussing Chipotle's growth and financial performance, I think it's important to highlight something that really sets them apart. From many other fast casual restaurants, their commitment to food with integrity. It's more than just a catchy slogan. It seems to be deeply ingrained in their business practices.
You're absolutely right. Food with integrity is central to Chipotle's brand identity and resonates with a growing segment of consumers who are increasingly conscious of where their food comes from and how it's produced.
Exactly. They've been pioneers in sourcing sustainably raised meat organic produce and locally sourced ingredients whenever possible. They've even taken a stand against GMOs, which is a bold move in an industry where those ingredients are often the norm.
It's a testament to their commitment to ethical and sustainable practices. It sets them apart from many competitors and is something investors should definitely consider.
Yeah, it's not just a marketing ploy either. They've backed up their words with concrete actions, investing in programs that support farmers who use sustainable practices. They've been transparent about their supply chain, allowing consumers to trace their food back to its source. I think that level of transparency is pretty rare in the food industry.
It's definitely noteworthy. That kind of transparency and accountability builds trust with customers, which is incredibly valuable, especially in today's world where consumers are bombarded with information and often skeptical of marketing claims.
And it's not just about appealing to ethically conscious consumers, right? This commitment to sustainability could also have tangible financial benefits for the company.
Absolutely. By sourcing high-quality ingredients and supporting sustainable practices, they're investing in the long-term health of their supply chain and mitigating potential risks associated with environmental degradation and resource scarcity.
That makes a lot of sense. It's a smart, forward-thinking approach that considers not just the bottom line, but also the broader impact of their business practices. And this commitment to food with integrity is also attracting a new generation of investors who are looking to align their portfolios with their values.
You're right. Impact investing is on the rise. Investors are increasingly seeking out companies that are making a positive impact on the world, and Chipotle ticks a lot of those boxes.
They're financially successful, they're innovative, and they're committed to doing good. It's a compelling combination that resonates with both customers and investors. So as we wrap up this look at Chipotle Mexican Grill, I think the key takeaway is this. They're a company with a lot of potential, but there are also some potential challenges on the horizon.
Investors need to weigh those factors carefully and make decisions that align with their own investment goals and risk tolerance.
But one thing is for sure, Chipotle is a company worth watching. They're innovative, they're adaptable, and they're committed to their values.
And who knows, maybe they'll even defy those bearish technical indicators and deliver a breakout performance in the coming year.
We'll certainly be keeping an eye on them, and we'll be back next week with another insightful look at a different company. In the meantime, we'd love to hear your thoughts on Chipotle. Head over to our website or social media channels and let us know what you think. Thanks for listening to Investing Talk Podcast.
And don't forget to subscribe. Share this episode with your fellow investors. And leave us a comment with your thoughts or questions about Chipotle. We appreciate your support.